The Icons of Real Estate Podcast. Are you ready to learn the proven money-making secrets from top-producing icon agents? Ready to skyrocket your business? This podcast is for you. Tune in every week with your host, Tomasz Fonseca, and find out how to implement proven strategies to 10 times your business, from $3 million to $30 million in just 12 months. Brought to you by the Masters at Real Estate Marketing, Arter SEO.
Welcome to the Icons of Real Estate podcast. I'm your host, Patty Teal. Let me tell you about today's guest. His name is Anthony Scandariato. Anthony is co-founder of Red Knight Properties, a privately held boutique, multifamily, mixed-use real estate investment and property management company. And they have a track record of building and managing portfolios that deliver dependable cash flow and equity. Welcome, Anthony.
Great. Thank you for having me, Patty. Really excited to be on here.
Oh, I'm so happy to have you on here too. So we generally start with having our guests share their story, how they got to where they are today. Did you do different things before you got there? So I'll turn it over to you.
Yeah, absolutely. So I started out in the business in 2014. But before that, I was working in consumer products and retail, a completely different business, but it was a startup company and it was very obviously entrepreneurial, and we were able to have a small amount of success, and then wanted to transition into real estate. So I ended up working for somebody else, another commercial real estate operator who was acquiring and repositioning Class A multi-tenant office buildings up and down the East Coast, anything over 200,000 square feet. And they were I'm based in New Jersey. I'm about 45 minutes outside of Manhattan, Midtown, just for perspective. And, we were acquiring assets up and down the East Coast. When I was there, I helped grow their company from about 600 million under management to a little bit over $1 billion when I left in 2020.
Goodness. That was billion with a B, yes?
Billion with a B.
Yeah.
But these office deals are large, and sometimes they're in trophy downtown spots, or large suburban office campuses. I'm talking almost 1 million square feet, half a million square feet. Really learned a lot. Was able to learn how to, underwrite a deal, how to raise the capital, how to figure out the debt structure, how to asset manage, overseeing property management. Learned a lot about the accounting. So I was able to learn a lot while I was there. And while I was there, I worked part-time at buying some smaller multifamilies, 2 units, and kind of like 2-unit properties on my own. And then I ended up meeting my business partner, Brian, who he's still my partner today, through a mutual friend. And he was retired and wanted to acquire some commercial real estate, primarily multifamily. Although I was working in the office field, a lot of the skill sets applied to any asset class, in my opinion. So I had some small success on the multifamily side on my own properties that I bought, and ended up partnering with him. We bought about 70 units together, and I was still working full time. He would do a lot of the management, but I would help. Very simple structure, partnership structure, and each contributed capital. Each kind of pari passu, split, and we just wanted to do more, and ended up finding a 50-unit building and kind of close to our backyard in New Jersey, and wanted to figure out how we could acquire it. And we were kind of doing a similar model where I was working. So I was like, well, we could structure it this way and bring on friends and family and other partners and investors. So we ended up doing that in late 2019. And then we had another one go under contract kind of like early 2020. And that's when I left the full-time position to pursue this. So now, fast forward to kind of like late 2022, we have about 900, almost 1,000 units in 5 different states. That's New Jersey. We were in New York, not anymore. Pennsylvania, Florida, and Ohio. So it's all apartment buildings, 50 units and up, 50 to 200 units, middle market deal size, anywhere around 50 to 20 million. And we're usually partnering with individuals. So individuals like you and I, Patty, that, work full time and, have extra money that maybe they don't want to be exposed to the stock market with all its ups and downs and want more
Sure.
passive income and appreciation. So we've been doing that. We have about, I don't know, maybe 82 active investors and partners in our deals. And we've done probably 15 deals, in the grand scheme of things, that have gone from purchasing the property to renovating to either refinancing or selling. So, we're just continuing to piggyback off of the track record that we've had. So that's the long and short of it, Patty.
Oh, well, congratulations on your success. That sounds like a very great journey that you've been on. And I bet even your retail sales background helped you to be successful.
Thank you. Yeah, a lot of the skills, marketing, definitely sales for sure. I think that's the number one, even though this is a little bit different when you're selling investments. It's just a different
Sure.
sales cycle.
Mm-hmm.
And it takes longer, which is
Mhm.
fine because
Right.
it does pay off.
Yeah.
But yeah, a lot of the similar skills.
Yeah. So, for people that don't know, what are the benefits of working with a company like yourself that is a syndicator rather than doing it on your own?
Yeah, you can do it on your own. It's, that's how I started.
Mm-hmm.
And it took up a good amount of time. It didn't take away from the full-time job. But on the weekends it took up time and
Sure.
whatnot. And as you scale, it's just going to keep eating more and more into your time. And that was one of the reasons why I left full-time, because we had 220 units at the time and it's just too much. If you had the time, then you could try to do it yourself. And, obviously education is key. Listening to podcasts like yours, Patty, and, other podcasts that are doing similar deals, and you can learn how to flip, or you can learn how to buy and hold. You have to figure out what type of assets you're working on. You can learn how to underwrite. There's all sorts of different courses. It just takes time. So, what we try to do is we streamline and speed up that process for somebody who's looking to generate income and also have upside and experience with the manager. We have a property management company in-house too, so all of my partners are relying on us to execute on our business plan and make sure that it's happening. So there is a trust level that has to take place. And that just comes with experience and time and really producing on what you said you were going to do. So a lot of my partners are working there. Some of them are lawyers, some of them are actually real estate brokers, some of them work in marketing, some of them work in insurance, and they just don't have the time. They might have kids, they might have a family, they're not going to have the time to figure it out. So
Right.
That's really what it comes down to. You can certainly buy something and be active, but it comes down to the time.
Yeah. And the learning curve, as you said, you can start watching podcasts and take seminars, but if you can go with an expert and they can take care of it and you can sit back, sounds pretty good to me.
Yeah, and finding deals takes a long time. I mean, there's plenty of deals out there, but you have to look at a lot to find a good one,
Right.
and that takes time. That's almost a full-time job within itself. The property management aspect is definitely a full-time job.
Oh, yes, yes.
So it's just the more and more I've been involved in the business, even for us, it's a lot. So I can't even imagine if someone was trying to do this on their own from scratch, just to build their own portfolio without partnering, because really the key in the business to be successful is just partnering with people, because you're going to run out of money at some point.
Sure.
And resources and skills. So partnering is, for us, been the key to success.
And how do you find those partners?
Usually our greater networks. I have a professional. Still have a professional network, and then my business partner has a professional network as well. We've just continued to grow that. We have a podcast too. A lot of partners come in through there called Discovering Multifamily, and I think we have like 210 episodes right now. We've been doing it for a couple of years. A lot of people coming through that way, hear us interview guests just like you're doing, Patty.
Right.
And that's been a great source. But we get to know everybody.
Sure.
We have to. We want to like who we're working with. There's been a lot of people who have reached out who I just didn't get a good feeling, and I didn't end up partnering with them.
Right.
So you just gotta, obviously you need to be SEC compliant. You have to go through all the steps as a real estate sponsor, or if because you are issuing securities. So we do, abide by that the best to our abilities. So that takes getting to know somebody, and that takes time.
Absolutely.
And at the end of the day, if it's not a good fit, then it's not a good fit.
Right. Well, you can be discriminating at this point, which is really great. So you mentioned, finding partners, and we talked about that. And how do you find deals? How do you know when it's a deal? What are the things you look at?
Yeah, just being in the industry, getting a reputation, dealing with different brokerage firms. It really comes down to relationships. There's many different ways to find opportunities. The best ways for us have just been through our relationships, because we've been around. That's been the best source for sure. Referrals, different. Let's say we'll work with the broker from CBRE in Florida, and then we're looking into Ohio, and so they'll put us in touch with their Ohio broker, and then it's kind of there's a trust level right there. There's a lot of tire kickers in the business, unfortunately. So
tire kickers, that's cute.
so we try to just leverage our relationships the best we can.
And I guess what I was asking is, how do you know it's a good investment? Is location the most important thing? I'm sure there's many things you take into account. What type of analysis do you do?
Yeah, of course, location is obviously in our mind number one. We look at a lot of different factors. That's a whole episode within itself.
Okay, yes.
But we usually have a underwriting template, so it's basically an Excel model which has different functions and inputs and outputs that we throw and spit the deal into, and just see high level. Usually when someone sends us an opportunity, we kind of, even if it's in a new market, we kind of know, like, that's not what we're looking for. We kind of, it just, because if you stick to your criteria and you know what you want and you know what you're looking for, it's almost a little bit hard to evaluate an opportunity that doesn't really fit. It's almost like, just if you know what you want, stick to your investment criteria, and it's all cyclical too. The business, to some extent, it does, it lags other markets, like say the stock market, for example, the ups and downs. Real estate is usually longer market cycle. So it really depends. We try to we just kind of stick to our criteria and they haven't needed to deviate. So you just kind of, if you know what you want, it should be fine. It might take a lot of work, but you will get there.
That makes perfect sense. Good explanation. So reminds me of going shopping. You kind of have in mind what you want. Don't get distracted with all these other opportunities that don't have anything to do with what your bread and butter is.
Absolutely. Yeah, I would compare it to shopping for sure.
Thank you. And you only work with accredited investors, and some of our listeners may know what an accredited investor is, but could you review that for people that don't know?
Yeah, I know the definition has changed recently. I haven't really been caught up with it fully. I work with accredited. I have some non-accredited. It's all SEC compliant. Accredited, I know, is a net worth requirement, and then there's an income requirement, and also you might be able to get around that through an accreditation, whether that's a financial planner or advisor. Or some kind of financial work experience, some certification. We have all our investors and partners kind of check a box on our form if they're accredited or not.
But you work with both? You said both accredited.
We work with both. We work with both. There's different syndications, 506C, which is a mass marketed syndication. You might see it on Facebook or LinkedIn or Instagram or whatever. And then 506B is relationship based. So every investor or partner that we develop some of a relationship with, we usually just send them the deal, and then it usually gets fundraised. So that's how we've been able to do it. So a little bit different from going out to the screaming at the top of the mountain, oh, we have this deal. We don't really we don't really do that.
I
So
understand.
if you do that, then yes, all your investors have to be accredited and
I see.
SEC compliant.
Mhm.
Again, I'm not the 100% an expert because I know the definitions change, but that's my high level understanding.
Right. So, what are the major risks? Because I know you're talking about working people, and can they use their IRA to invest?
Yeah, we've been seeing more and more of that self-directed IRA. You just have to talk to your IRA custodian. There's a few that we work with that have been reasonable. You have to really understand their fee structure too, because you don't want to get killed on the fees. But yeah, 401k rollovers have also been an option as well. But it's totally up to the individual. If you're just tired of, you know, either your money manager just putting in whatever they think is hot, and you kind of want a little bit more control, even if you're not doing the work, like you're not the boots on the ground. If this is an asset class you're interested in, then you could self-direct it, and especially if don't meet the withdrawal age limits yet, and you're not looking to really take it out of your account, if that's a Roth, for an example. A lot of people come in with that. They just, whatever they want to roll over, they self-direct, and they just take that amount and use that to invest and kind of keep it going with us.
Yeah. And what percentage return would you consider a good one?
Yeah, it depends on the market cycle. We look at different metrics. So a lot of people look at internal rate of return, there's cash on cash return, there's multiples. We look at all three. It really depends on how long you hold the asset. We typically, when we look at a deal, we're looking at it over at least a 5-year period.
Okay.
And we're looking at, like, let's call it a 15% internal rate of return. And we try to be, pretty conservative with our assumptions over that time period. I know it's very hard to project, but I see a lot of people projecting like 2-year holds, and a lot more could go wrong in 2 years and 5 years in real estate, just because of the cycle of the asset class. So I'd say that's pretty typical. And we do pay preferred returns and distributions along the way. So on that front, I'm definitely looking at least 8% kind of along the way, just from the cash flow. So yeah, we haven't really changed our structure in terms of how the returns get paid out and what we're looking for. Some of our deals, actually all of them, have been much higher than the 15%, but I would never, market a 40%. I wouldn't even market a 20%. I just try to under promise and over deliver.
Oh, I love that. Under promise and over deliver. That's good. So do you look at the investor or meet with them and analyze the risk for them, whether they're older, they're younger, they need the money to retire? Is that part of your job?
Yeah, absolutely. We have investors from all different walks of life. We have, investors in their early 20s, and we have investors in their 70s. So all different walks of life. Like I said, most of the people we know, honestly, face to face. So, from let's say the East Coast area, there's some investors on like in the Midwest or West Coast that we got to know over time. But yeah, we try to do it face to face if we can. I know it's a lot of juggling with different people, but again, we want to be SEC compliant. We want to make sure we're always, good with that. And that the face to face is definitely,
Absolutely.
it's not a requirement, but it's for us, it's, regardless of that, for us, that it's good for us to do, and for them to understand what they're getting into, and kind of the risks and the reward, scenarios, different scenarios that they might want to consider if they're going to invest. So yeah, we do walk them through the opportunity. But a lot of the people that are in kind of know how the real estate game works, and there's some new people that come in that might have more questions than others, but that's fine. That's what we're here for. Education is important.
Right. And is there a minimum investment? Maybe somebody comes in, they haven't done it before. Can they stick their toes in the water without investing too much?
Yeah, usually our investment's 50,000 minimum. I've dropped it a couple times for some of the younger people that want to come in for like 25. But typically most people want to do at least 50. Our average investment is getting larger as repeat investors keep coming back.
Sure.
But yeah, I try to keep it the same. And again, our deals are anywhere between 5 to 20 million. So when we're putting one together, at least for now, the average down payment or raise between everybody is 3 to 5 million. So we might end up with 30 people in the deal, give or take. It depends on the size.
Right. And I was looking at your website and there was a question. I didn't look to the answer, so I'm going to ask you, is it good to invest with your LLC? So I know a lot of people are small LLCs, single member LLCs, and of course, much larger as well. Is it best to invest through a company?
Yeah, you can. If you have an LLC set up with other investments or, other real estate in it, you certainly can. A lot of ours just come in individually. We take, as the operator, the general partner, all the risk in terms of if we get sued or, if there's, some kind of insurance claim or, any type of fraud, we take the risk there. So on that front, there's really no liability if they came in like a sole member or joint member with their spouse. So yeah, some people do have that, but it's usually ones that have it set up already. Because with an LLC, that comes with annual fees and compliance that they have to keep track of. But if they have like multiple investments, whether that's with us or with us and somebody else, they usually have that set up. So it's kind of already there for them to use.
Well, I'm so impressed with how you've grown your company in a relatively short amount of time. What are your goals for Red Knight's investment as you move on in the future?
Yeah, we don't have any specific like unit count goals. We just want to do good deals. We want to, treat our investors, with, we invest our money too. So we want to make sure that our money's aligned, with our investors. And we try to do at least 4 deals a year if we can. So like once a quarter. We have some assets where we've gone almost execute on our business plan. We're looking to kind of recycle that, and then hopefully we'll be able to keep redeploying the money. But I don't have a unit count goal. I have like a transaction volume goal kind of each year, but that might evolve over time.
Yeah. And if somebody is listening or watching and they want to get a hold of you and read more about Red Knight's investment approach, how would they do that?
Yeah. So we have a free ebook on our website. It's called How to Leave Your 9 to 5 through real estate and become financially independent. So we have a free ebook on our website, which is redknightproperties.com. That's Red Knight with the K. If you go on there for the first time, it'll pop up. Just put your name and email in there, and then you'll get an email with the ebook. And then on there, we'll have all my contact information as well. So you could, reach out to me, even regardless of that. We have a LinkedIn, Anthony Scandariato on LinkedIn, or Red Knight Properties on LinkedIn. Facebook, we're active on, Instagram, Twitter, kind of you name it, on all the platforms, either Red Knight Properties or my name, Anthony Scandariato, or my partner, Brian Leonard. And like I said, we have a podcast, Discovering Multifamily. So definitely check us out on there. And we're on iTunes, pretty much every platform you can think of. So there's definitely ways to contact
us. To find you. Are there any challenges to this work that you're doing?
Challenges is always, there's always challenges, whether that's on the management side, on the transaction side, buying and selling side, and even on the asset management side. Always challenges every day. So you just got to keep, got to get through them. That's life. The biggest challenges, obviously, right now is just kind of recession risk and other, factors with interest rates and inflation. So that's really been, an issue for us in terms of just how to navigate that, how to be looking at transactions moving forward. I wouldn't say it's an issue, but it's something that we will work through. So that's been, when the market dynamics, I think, are always challenging when they kind of shift a little bit. And but if you have, like we said before, real estate moves slower than a lot of other asset classes. Right. So if you kind of structure your deals and your debt in the right way, you can kind of weather out some of these storms. So we've been able to do that. So it's just a matter of how do we approach it moving forward.
Yeah. Thank you so much, Anthony. So everybody check it out, Red Knight with a K, properties.com, Discovery Multifamily Podcast, or Anthony Scandariato, and it's spelled just like it sounds.
Yeah, try that. But yeah, look forward to hearing from all of you. And thank you so much for having me, Patty. I
Thank you
appreciate it.
so much. I appreciated it. You shared a lot of great knowledge. Bye-bye now.
Thank you.